We're here today with Steve Grace with Discover Charity. How you doing, Steve?
Very good.
Good. Hoping you can shed a little light on what you guys do and how this is such a benefit for senior citizens today.
I've been in real estate, mostly in California, a little bit more than 45 years, specializing in a lot of income property, investment property. And over the years, I've dealt with a lot of people and seniors who have said to me, I'd love to sell my property, I just don't want to pay those capital gains taxes. And if you can make me avoid them, I'll sell them. Never happened. Anyway, we finally have come across a process that allows people to exit their property, stop being landlords, but maintain the income and not pay any capital gains taxes. I found this by working through a nonprofit association. They have a program that allows the property owner to give their property to the nonprofit in exchange for lifetime guaranteed income for a tax deduction. And the process as an off product, which is a cash gift to the charity of your choice. It seems to most people it's just too good to be true. It's too much. It's impossible to be there. How come I never heard of this before? Well, the basic problem with the process is that charities are afraid to deal with the real estate. There's inherent problems for them in doing that, so they just don't tell anybody about this. This process has been around for over 50 years. The IRS is involved helping create the numbers. It's all good. Everything's good. Brokers get paid, owners get paid. It all works out except for the government. They don't get their taxes. In California, for instance, the capital gains tax for a person selling $1 million building right now would be about 40% of the value of your building. So if you're selling $1 million building,
40%?
you're kissing off about $400,000 to be gone forever. You're going to have, let's figure 7% in cost of sale, which would be a commission and closing costs and fees. You're going to have the 3.8% Obamacare tax goes to the federal government. You've got a 25% recapture tax on depreciation, which is going to run most people $40,000, $50,000. Your capital gains tax in California is 13% of the gross profit. The capital gains tax for federal is not 15% for you because your sale was over $440,000, so you get to pay 20% of the net profit of your building. The combined taxes alone on a sale of $1 million building with a very small basis is going to be about $330,000 in just in taxes, plus a $70,000 commission. You net about $600,000 from the sale of your $600,000 for your $1 million building. It's a nice nest egg, but I think I'd rather give you an offer right now. I tell you, I will take your building through our charities. We'll give you $40,000 a year guaranteed for you and your spouse's lifetimes. Fixed rate. We'll also give you a tax deduction of about $500,000 that applies to your other ordinary income and will carry forward for 5 more years. I'll also send a check in your name for about $100,000 to the charity of your choice when escrow closes, making you a major donor and allowing you to watch your donations work while you're still alive, which is pretty important to people that are boomer age right now, especially our age. The process is simple. We will talk to you in advance. I'll talk to you. Give me a call. Email me. I'll be happy to go through the numbers with you. We'll even give you a written proposal in advance so that you have the numbers in front of you based on your age and the basis of your building. And we want you to take those numbers to your accountant, your CPA, your family, your attorney, and beat them up. I mean, go through them, check them out, have your CPA do your numbers for the sale of your building. Now I know everybody's got an idea they owe taxes, but let's get specific. It's 40% of your income of the building. You need to really get down and figure out what you got to pay, because it can be crushing. There's nothing more painful in my life than my wife did, to this point of course, was have to sit down on a building we sold 15 years ago, and 6 months later she had to write a check for $110,000 to the IRS. It almost broke her heart. I mean, it did break. She was trying while she was writing it because it's very difficult. You have that money in the bank. It was your building. We worked for it. I worked 25 years having this building as a landlord. and the government takes 40% of my money. It's just not fair to most people. Other people, it's okay, they'll pay the taxes, good. So this process is good for some, you know, not for everybody. Everybody has different views on how to handle it. The heirs will get involved, the charities will get involved. Your charity won't even know you're going to give them money. Our foundation will handle the entire process for them. You'll tell the foundation where the check's supposed to go and what it's going to be there for. And the foundation, when the deal closes, will send it right to your charity in your name. Then the guy is going to call you up and say, "Oh, Bob, thank you very much. We're going to have a dinner in your honor. Friday night, can you be there?" And they'll be very, very happy with you. The other thing is, sad to say, one of the spouses is probably going to pass before the other one. Most likely the guys. So in this case, you get to leave your wife with a guaranteed check coming in monthly, deposited in the account by wire from the annuity company. Okay? No more tenants. The building is gone. No risk of vacancy factors, paint jobs, roof replacements that she has to do by herself in the future. It's just money coming in. It's like Social Security. She just gets a check forever. That's a nice thing to leave behind and not an old building. So if you have vacant land, same thing. Buildings, vacant land, whatever you have. Right now, a lot of people either will have their property listed for sale or considering listing it for sale. If you got that situation, we can still make a transaction for you. If you've accepted an offer though, we can't do that. Then you're out of the picture. If your mortgage is more than 20% of the value of the property, we can't do it either. If you're under 62 years old, you're too young, the annuity won't work for you. So you have to wait a couple more years to make it happen. This is the alternative to a 1031 exchange, which means you're trading your problem property for a new problem property. More tenants, more buildings, more of the same. You're also just deferring your taxes. Because at some point, you got to pay the piper. They want their money, they want their share. So I'm here to talk to you about it. We'll talk to your associate. It's strictly an above board IRS approved program. You know, the IRS calculates all the numbers we're going to give you are all based upon a calculator created by and changed monthly by the IRS. So there's nothing secret here, nothing, it's just that you don't know about it. It's a great product.
And the great thing is they're going to keep working with their real estate agent. All the numbers are going to be up front, so that way anyone can just take those numbers that you guys give them, take them, like you said, to their planner, financial planner, their CPA. Everything is above board.
Absolutely. The numbers are up front, and it has to work for you. I mean, it truly does. If it doesn't work for you, we don't want to get involved. Because, you know, it's not good for you, it's not good for us. If your property is listed right now, it's great. Because all that has to happen is you make an agreement with the foundation, and the seller, when an offer comes in, the seller will be the foundation and not you. Because the foundation does not have to pay capital gains taxes. They get to keep all that money from your $330,000 in taxes they don't pay. That's actually your annuity account. That's what pays you the rest of your life, is your own taxes you're not giving to the government. The broker, he's got to sell the property for us. We need him to be successful, and we'll just work right along with him, and nothing changes at all. The price of the property is the only thing that we're worried about, and we make sure that it sells for what you listed it for, or close there too. And that'll be part of the discussion. You know, so it's very simple. Seems like a big thing, but it's relatively simple. The entire transaction with the foundation and the donor, normally like 2 or 3 pages. It's a very simple agreement, and the contract's there. The other thing it's really, I think it's very solid for people, especially seniors, because they're going to worry, what if that guy doesn't keep paying my payments in 10 years from now, right? What if that foundation disappears and goes? What they do, they take and they purchase a reinsurance annuity for you. And it'll be with one of the major insurance companies in the world. AIG, New York Life, Prudential. That'll be who's going to be paying you the rest of your life. So you'll know that it's not some little charity in the middle of nowhere. It is the major company around. And they pay for it, and you get paid by them. Social Security.
And it's guaranteed.
Guaranteed.
For life.
It's one time, it's called a SPIA. The single payment immediate annuity. It means that they paid cash for it fixed rate, guaranteed amount of money, as long as one of you is alive and sends a check
Great.
every year. So if you live 30 years, hallelujah. But
Even better.
even better, yeah, they gotta keep paying you. There's a lot of money. If you look at the numbers, you just break the numbers down. If you take, let's say $40,000 a year is for a pair of 70-year-old people today, right? And roughly, based upon their numbers. But $40,000 a year, if you live 20 years, that's $800,000 you get paid over the life of this. Plus the money you'll make on the tax savings, okay? But if you sell a property today and you net $600,000, you won't have any money left, obviously, in 10 years from now that have been used for various sundry issues. The $800,000 is going to come to you as long as you live. If you live 15 years, it's $600,000 coming. So all the money you're giving away, the $600,000, comes back to you in a short lifespan. Not counting the money you gave to charity of $100,000. Not counting the tax deduction you get to write off against your other ordinary income. It's hundreds of thousands of dollars better to do this program than it is to sell a property.
So what would you say the best thing to do is just, if you watch the video, give you guys a call, or what would you suggest?
Yeah, we're here. I mean, we're old folks. We're the boomers. Then we like to talk to people, much more so. So give me a call, answer the phone, and get back to you. Well, first thing we'll do is get some numbers from you, put together a written proposal, 1 page, very simple, and here's your 4 or 5 numbers that apply to you. Well, actually, we can give you how your future income will be taxed by the IRS in future years. Part of it's going to be tax-free, parts going to be taxed as capital gains, and part will be taxed as ordinary income. Small amount in ordinary income. So your income in the future, tax-wise, will be taxed less if you do this transaction than if you keep the building. Your building income, net income, is taxed as ordinary income. We're going to have you taxed more at capital gains rates. This year is 15%, well below the ordinary income rate. That works out well also.
Great. So how do we get a hold of you?
Give me a call. Go to the website, 623-255-2661.
Great.
My cell phone. I'll answer anytime.